Okay, so in this video we will be going to cover Pelta company question, and the question requirement is first to calculate net present value of planned investment project, and second is calculate discounted payback period of planned investment project, and last financially acceptability of investment project. I always used to told the question like if this part has been attached in the first part, just don't ignore it, will carry a mark around between 0.5 to 1 mark, so be careful. अभी तो अलग अलग दे दिया है, so no problem. And last is critically discuss the view of director on Pelta company investment appraisal. Now let's move to the question. The director of Pelta company are considering a planned investment project costing $25 million payable at the start of the first year of operation. Okay, the following information relate to the investment project. Okay, so first we will write them here. We will take 30 common in our calculation, and the life of the project is 4 years. Okay, after that sales unit, let us now ignore the initial investment, we will keep it below. And initial, okay, sales unit per year is 520. I have already taken 30 common. 624, then 717, 788. What I did, I put it in the year 0, so it will start from the 1. Okay, now selling price is 30 constant throughout the year, variable cost is 10.20. Okay, fixed cost is also given. This information need adjusting to take the account of selling price inflation of 4% per year and the variable cost inflation of 3% per year. The fixed costs which are incremental and related to the investment project are in the nominal terms. So basically this is the case of a specific inflation because selling price has been inflated by the one rate and variable cost has been inflated by the one other rate. So this is not case of the general inflation. So what we have to do is we have to calculate selling price per unit in nominal terms. Currently it has been given in the real terms. And how do we get that? Okay, so selling price is constant throughout the year, 30, right, into 1 plus inflation rate is 4% power 1. Okay, and for the second year again 30, 1 plus 4% power 2, for third power 3, and for the fourth power 4. Okay, so this is what we got the selling price per unit in nominal terms. Now it's time for the variable cost per unit in nominal terms. And we first is 10 into inflation rate is for the variable cost 3% per year power 1, 10.3. And for the second year 10.2, 1 plus 3% to the power 2. And for third year 10.61, 1.03 power 3. And for fourth year 10.93 is our variable cost per unit, and just incorporate inflation which is 3% in our case, and power just take 4. Okay, so now we got our variable cost as well. Now it's time for to get the revenue. Okay, so revenue, sales unit into selling price per unit, we got our revenue. Now it's time for variable cost. And how do we get that? Sales unit into variable cost per unit in nominal terms. Okay, so now netting off we will get contribution, right? So contribution Okay, so now we will deduct fixed cost, and be sure fixed cost is already in the nominal terms, and it should be incremental, as the question mentioned the fixed costs which are incremental. And you might be wondering why the word incremental has been mentioned, because this fixed cost is occurring due to taking this investment project. If the Pelta company has not been taken this investment project, it want to occur this fixed cost. So this is the incremental cost. So what is that? 700 minus 735 minus 779 and minus 841. We will get taxable cash flow. Okay, now let's read the further question. The year for sales volume is expected to continue for the foreseeable future. Pelta company pay corporation tax of 30% in one years in arrears. Okay, so now it's time for to deduct the tax from the taxable cash flow, and it is 30% in our case, right? So, and tax will be paid 1 year in delay in arrears. So we have already been shifted this. And company can claim tax allowable depreciation on 25% reducing balance basis. So on if in case of the tax depreciation allowed by the tax authority, in that case we will get the tax relief. So tax relief, in previous video I have been told how to get the tax relief to the shortcut as well as to the process. I think the question name I don't remember, after arm cliff I think I have been mentioned this thing. Just go and watch from those video, you will get to know tax relief. So how we will get the tax relief? First, take the initial investment, which in our case is 25,000, by taking 30 common, multiply it by tax rate, and in our case is 25%, and again with the tax rate I am saying, depreciation rate then tax rate. Okay, 1875 for the first year, and we will take it's 25% in second year, and second year 25% in third year. And for last year we won't do this. What we will do, we will first calculate how much overall tax relief we will get in this investment. Okay, so 25,000 is our initial cost, and just look for the information whether the residual value has been given or not. So the view of director of Pelta company are that all investment project must be evaluated over the 4 year of operation with an assumed terminal value at the end of the fourth year of 5% of the initial investment cost. Okay, so here terminal value means the residual value. Okay, so just wait. Residual value and initial investment, which is 25,000, which is payable immediately, question told, and residual value is 5% of this initial investment. So let's calculate the total tax relief we will get on this investment. We will net of the initial amount and residual value, and then multiply it with the tax rate, which in our case is 30%. Okay, this is the total tax relief we will get in this investment, and take this and deduct the whatever you have been tax relief you got in the previous year in order to get the year 4 tax relief. We got it, and the question has told the tax should be paid in the arrears, so it means 1 second. Okay, oh, what I did here, it will be 75%. My mistake. it will be 75% of this amount. Yeah, sorry. Okay. Okay, so all done. Now net cash flow will be and tax will be paid in the area and relief will also get in the area. So we have been separate this amount over here. So sum okay, so this is our net cash flow and question has told to calculate NPV. I will calculate it through the Excel formula. And how do we get that? We will simply take the initial investment plus, but be sure initial investment amount should be in the negative, NPV, and our cost of capital. And now cost of capital should be in the nominal terms, not in the real terms, because we have already included our cash inflow and outflow. So both net present value and discounted payback must be used with a maximum discounted payback period of 2 years. The real after tax cost of capital of Pelta company 7% and its nominal after tax cost of capital is 12%. So here we will take 12% because it incorporate inflation in it, and just select the undiscounted cash flow. Okay, so this is our NPV. So next question is calculate the discounted payback period of the planned investment project. So this one is for the NPV. Now discounted payback period. So here what we have to do, first write down year 0, 1, 2, 3, 4. Okay, and cash flow we will simply select it from the above. Okay, okay, so we got it. Now discount factor at the rate of 12% nominal value. Okay, so you can use discount factor table, no issue, but I will calculate here. Okay, so 1 plus 12% power minus, okay, copy. Now present value, this multiply by this. So now 25,000 was initial investment. We got, let me first convert it into the exact number. Okay, so 25,000 was initial investment, out of which we got 9,079 in the first year. Then second year we got this. Okay, so here it becomes positive, means 2 years and few months will be the answer. So let's calculate. Divide it by the amount which we received. It was 0.7, so 2.7 years you can assume. But in question it has been told that company payback period 2 years. Yeah, maximum discounted payback period of 2 years. Okay, so while commenting the financial acceptability of the investment project, it should be mentioned. So for the first, NPV of the project is positive, so project is financially acceptable according to the net present value. But in case of discounted payback, we got 2.7 years, but in question it has been specified that it should be 2 years for in order to accept the project. It means the 2.7 is greater than the maximum target discounted payback period of 2 years. So from this point of view, this project is not financially acceptable. Okay, so this thing you have to write it down in the B part. Okay. Critically discuss the view of director on Pelta company investment appraisal. The view of director of Pelta company that all investment projects must be evaluated over the 4 year of operation. So as in the question told that the year 4 sales volume is expected to continue for the foreseeable future, right? But the director view of the director is that the investment project should be evaluated on the basis of 4 years, so which does not make a sense, right? So in order to make this investment appraisal for the project to be accurate, after 4 years sales also be considered. Okay, one things you can write here, and next thing you have to write is with an assumed terminal value at the end of the 4th year of 5% of initial investment cost. The view of director that terminal value of 5% of initial investment. But in reality it won't be the 5% of the initial investment, it might be the higher or it might be lower than this amount, so you have to criticize this point as well. Okay. After that, both NPV and discounted payback must be used with a maximum discounted payback period of 2 years and the real after tax cost of capital Pelta company 7% and nominal. Okay. Okay, so for this point what you should write, uh, as according to discounted payback period this project is not financially acceptable, right? But according to NPV it is acceptable. So discounted the payback has its limitation that it ignores the remaining cash flow after the payback period. So according to that this director must take decision on the basis of NPV and which indicate the project is financially acceptable. So this point you have to mention for the view of director, and it's for 6 marks, and I just told you 3 points, just describe it, I think it's enough. Okay. Okay, let's do this copper company as well in the same question. Yeah, we will continue in the next video. Okay, so stay tuned with my channel. Okay.